Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you every Monday by Options University. This is Butch Shorek. It's Monday, July 21st, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional video constitutes promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. With that thought in mind, let's take a look and see what happened in the indexes during the last week. Looking first at the Dow, NASDAQ, S&P 500, Russell 2000. As we look at the change for the week, looking at change, we see all positive numbers except for the Russell 2000. So with that thought, let's take a look at the numbers for the week. Percentage change for the week: Dow up to 0.9%, NASDAQ down 0.4%, S&P 500 up a half a point, and finally the Russell down 0.7% for the week in our what we would call a mixed market, since they're not all going in the same direction. Giving us year-to-date totals for the year: in the Dow up 3%, NASDAQ up 6.1%, S&P 500 up 7%, and finally the Russell down in negative numbers, down 1 point for the entire year. What kind of economic announcements do we have for the coming week? Well, we certainly know that we are in the midst of earnings season, and that just certainly seems to be what's controlling the overall market. Looking Monday, July 21st, we see very little happening as far as economic announcements that will affect the market in any way, shape, or form. On Tuesday, we have CPI before the market opens, and then you see we got some indexing coming out on houses and home sales, existing home sales, and finally we got the Richmond Fed Manufacturing Index coming out at 10 o'clock. Looking at Wednesday, of no consequence whatsoever. Looking at Thursday, every Thursday morning at 8:30, we have our weekly jobs claim report, which will be coming out, which has certainly been giving us decent numbers, nothing to slow the market down. PMI comes out at 9:45 on Thursday after the market opens, and again, we got new home sales coming out at 11 a.m. I'm sorry, at 10 a.m. on the new home sales. And then Friday, we got durable goods orders giving us a report on the last month. And with that, that takes care of the economic announcements for the past week. Now, let's take a look at the SPX and see what our overall trend is. Pretty easy to read the trend. That looks like this. 30-day moving average above the 50-day moving average, above the 200-day moving average. And we are definitely in an uptrend. Summer doldrums, be it at low volume, we just see this market just keep right on climbing. We had an interesting week this week when we look at a little closer scale, looking at, instead of a 3-month chart, we're going to look at a 1-month chart. We see we had a huge down day on Thursday and bounced right back up to the same levels on Friday. Well, what happened is we had that jet crash, which was certainly a horror episode in our personal history. With that thought, let's take a look at the Dow, see what that does. I'm sure it's going to look very much the same as we saw the Dow take that big dive on Thursday and pop back up on Friday. And Dow hit all-time highs as we looked at the week this week, well over 17,000, closing above that level for the week. So next, let's take a look at the NASDAQ, and we see NASDAQ lagging a bit. Our tech index certainly bounced off that 30-day moving average, showing us a nice uptrend. We had our crossover over the 30 and the 50 take back in June, and it's been staying above that level so far. A little bit of weakness as we're getting lower highs. We'll see whether this pops back up again and pull back because of the episodes in the Ukraine. But with that thought, next comes the Russell 2000. This is the one that is in negative numbers for the year, down 1%. And looking at the Russell 2000, we see that it also had that big knee-jerk reaction to that horrible catastrophe. And we see that on Friday, had a big day back up, again, continuing to hold above the 200-day moving average. Not showing us the kind of strength that the other indexes, but we would expect that of the Russell at this time of the year. A harder time with the small cap to keep up pace with the other indexes. All right, with that, let's look at some of our other indexes. We look at the VIX. Again, was there fear in the market? Well, we saw this big spike take place in the VIX because of that announcement of the jet crash, and then we see that it pulled back down Friday, closed at around 12. So the market seemed to handle that news quite well. Looking at the bond market, let's take look and see how some of the other sectors are doing, and we see that the bonds kind of popped up as a little flight to safety with that kind of news taking place. What happened with gold? Well, let's take a look at the gold, and we see big pop up on Thursday, and then went back to more normal ranges on Friday, and we see that it's above that 30-day moving average, with the 30 above the 50 above the 200, showing some movement to the top positive side since about the middle of June. And finally, what kind of volume did we have this week? Well, one would expect big volume with that kind of news, and that's exactly what we got. Big summer volume, as we saw that escapade take place with escalator moves in the market. But this is a definite example of how news can affect the overall market. Not a big surprise the way that took place. Looking at the financials, looking at XLF, our ETF for the financial market, we see that it weathered that fine, bounced off the 30-day moving average, showing us good strength, headed towards previous highs in this particular index. What did oil do with that kind of news? Well, the little knee-jerk in oil really didn't show us that it took place because of the Sarajevo, or not Sarajevo, of the bombing. But we see that oil is moving up off of a recent low at 36.50. Oil getting a little bounce. Never made it down to the 200-day moving average. So for those of you that are gold members, stick around for the stocks to watch. For those of you that are not gold members, if you'd like to see other free videos from Options University, go to www.optionsuniversity.com/free gold. And with that thought, thank you for being here on Monday, July 21st, 2014. This is Butch Shorak, bringing you Market Forecast by Options University, and we'll see you again next Monday as the market continues with its strong upward moves. Nothing seems to slow the market down this year.